Churchill Capital's stock has been soaring after the report that the SPAC plans on taking Lucid Motors public. Now, often the success and price movement of a SPAC is entirely dependent on the management team. And Churchill Capital CEO Michael Klein, a Wall Street veteran, already has a few successful mergers on his record. Let's take a look at them. In January 2019, the group announced a merger with Clarivate Analytics, a leading global provider of comprehensive intellectual property and scientific information. In July of 2020, Churchill Capital Corp. 3 struck an $11 billion deal with healthcare company Multiplan in one of the largest deals for a SPAC. To put that in another way, CCIV has no operating business, and the management team is very experienced in the SPAC space. And to make things even better, Saudi Arabia Sovereign Wealth Fund is a strategic investor in Lucid, meaning that the company basically has unlimited amounts of cash. Okay, maybe not actually unlimited, a significant amount of capital. Churchill Capital also said that liking this video significantly increases the chances that the SPAC merger goes through. According to the report about the merger with Lucid, Churchill Capital has started up a new round of funding that would support the merger between Lucid and CCIV. It looks like it's hoping to raise around $1.5 billion via private investment. And it's also worth noting that Churchill Capital has around $2 billion on hand since its IPO in July of 2020. And if the rumors are true about the merger, the deal would put the combined companies at an approximate valuation of $12 billion. There are some other details about the merger that are still unknown. That includes the name of the company as well as the ticker symbol that the shares of CCIV will switch to. Now, Lucid Motors is pretty much seen as the new Tesla in the luxury EV market. And over the past year, we've seen Tesla skyrocket 400%, as well as increased excitement about the EV market in general. The anticipation of a potential Tesla rival, which actually might be why Tesla has been slumping in the past week, as well as the momentum of the EV market, has drawn huge interest into this SPAC. Lucid Motors is based in California and is technically a pre-revenue auto group, formerly known as Ativa. In a recent interview with Lucid CEO Peter Rawlinson, stated that orders for their first vehicle, the Lucid Air, have been quote-unquote overwhelming. The first model of the Lucid Air is expected to be shipped this summer of 2021. Lucid currently has a first stage factory in Arizona, which is set to produce around 34,000 vehicles in a year, with the hopes that by mid-2020s that they will be producing anywhere between 400,000 vehicles a year. So pretty much think of Tesla, but like 6 to 7 years ago Tesla, in terms of where they are in production. Personally, I'm not a huge fan of SPACs, strictly because you're not necessarily buying the company, you're buying the company that's acquiring the company. So it is all dependent on the management team. However, with the track record of Churchill Capital, the potential gains here, as well as their past success with other mergers, it's sort of hard to ignore the potential of Lucid Motors under the management of Churchill Capital. Let me know your thoughts. Are you in this stock? Do you want to be in this stock? Is this the new Tesla, or are we just grasping for straws here? Let me know. Feel free to like and subscribe if you like this content, if you like me, and as always, I will see you guys next video.